you would have met some parameters by the analyst community, beaten some parameters by the analyst community. But how are you feeling about the quarter? How are you feeling about the deal wins? Because they seem to be really impressive.
Look, if I were asked in March April timeframe whether we would be at the same place at this time, I would have never imagined in my wildest of dreams to say so. But where we stand today, I think there is robustness in the business. There is a greater pipeline simply because customers are trying to create new operating models to operate in the new normal. And that has created a lot of opportunities in the marketplace for all the tech-driven companies. We have had a good revenue growth, a really good operational efficiencies driven margin upliftment.
Sanjay, I'm so sorry. Sanjay, I'm so sorry. Mandeep ji, this is really unprofessional.
No problem.
Sorry, sir. Sorry.
Mandeep ji, anyways, chaliye, we'll talk about this after the show. Please record this, Mandeep ji.
Yes, sir. Sorry, sir. We are recording.
I will start again. That's
Sanjay,
okay.
I'm so sorry
I also was. No. I was also.
L&T Infotech, they've had a good quarter from the looks of things. And let's get in Sanjay Jalona to speak about how he feels about the quarter and more importantly, how he feels about a couple of quarters ahead in this very eventful year. Sanjay, good having you. Thanks for joining in.
Thank you.
You would have beaten some parameters, met some parameters, but how are you feeling about the quarter? How are you feeling about the way the deal wins are? Because as I see quarter on quarter, from a 20 million run rate to a 40 million run rate, it looks really impressive.
No, we feel very good about where we are. It takes a long time to build an organization which can continue to grow quarter on quarter. And we have laid the foundation many years back, building capabilities, hiring right sets of people, focusing more on client value that we create. But frankly, 2020 has been a year full of challenges for the world. And if you were to ask me in March, April, if we would be in the same place, and I would, if I were going to be as confident as I am today, answer would have been clearly a no. But where we stand today, frankly, is a great opportunity for the tech industry, Indian IT industry, to help transform various businesses of our customers as they learn to operate in the new normal. In the new normal, you and I will never go back to 100% being, operating from pre-COVID and in the pre-COVID era. And it frankly means that banks need to, do more customer onboarding remotely. Insurance company needs to do sales and distribution and claims remotely. Disney has to launch a movie, Mulan, not only in theaters, but not in theaters, but on the OTT platform. And retailers need to have capabilities for online to offline, for ordering online and pick up at curbside. So this is creating a lot of opportunities. We are happy with the pipeline strength overall. We are happy with the large deal pipeline. Large deals have taken a little longer to close, but these are contractual things that were a lot easier when you were meeting face to face. But they will also get done. So we feel pretty good about it.
Actually, Chandra was talking about this piece that the way the dynamics of business are changing. He was quoted in one of the US dailies saying that he had to travel for $50,000 worth of deals, and now they're closing $2 billion worth of deals remotely. It looks very, very interesting. Sanjay, your deal wins are testimony to how good the quarter was for you. I mean, is this a sign of how things are moving generally, or did the COVID-induced periods of 2 quarters bunch up things for you as a company and maybe for the industry?
No, I think there is a tremendous opportunity. I don't think this is a pent-up demand that is driving the growth right now. It is basically all those new operating model examples that I gave to you, which is helping create newer opportunities for the industry. And it's not only us. So we are seeing a growth. So are other IT services companies.
True.
Everyone is seeing growth in pipeline and large deals in these times because such is the need for the market. And it's not only the leaders in the industry who are going to lead with such changes. It's every company. It's an existential problem. All OTT providers need to do that. All banks need to have customer onboarding remotely. It's not a choice. Time is of an essence. So that's why we are seeing more and more pieces of interesting works on new operating models being done by the tech industry.
Okay. How do you feel about the second half? Arguably, for the next, I mean, maybe asking for 18 months is too long a time frame in this very fast-changing technological world. But how do you feel about the second half? Would you reckon that not only the large deal pipeline, which is evident, but also the wins and the way these wins are coming for you as a company would continue to remain robust? So, for example, good margins, good sizes, and good execution timelines?
Look, where we are today, I'm confident that H2 will be better than H1, both in revenue terms, in large deals and pipeline as well. We have already crossed Q3 of FY20 numbers in our Q2 results. Where we stand today, we will confidently cross our Q4 FY20 numbers with Q3 numbers in the next quarter. So obviously H1 performance will be beaten in our H2. Pipeline is stronger. There is enough to be done. We need to continue to have the right level of conversations with our customers, and revenue growth could be created from there.
And as I find it difficult at times to kind of ask a CEO about digital, but this becomes such a big buzzword, right? So I presume, even when I look at reports and analysts who've written about the results, they all talk about how digital is constituted now 43% of the revenues, etc. You're anyways very high. Does this plus a higher offshoring mix, etc., create some levers for better margins? Because your margins, as I see, have surprised positively compared to what people anticipated.
That is right. And frankly, we had given so many discounts to the customers, in the past because they were dealing with situations which was very difficult for them as well. But they were all time bound. So as discounts have gone away, we have been able to do a lot better on the margin stuff. If you were to ask me in March, April, we had actually gone to the street in the last results that we would probably not be able to meet because of the discounts, the 14 to 15% margin net income level. Today, where we are sure that we will meet, we will be in that price band. We want to be in that price band, the margin band, and focus whatever efficiencies we get to keep driving up growth. So we have just announced that we are going to set up a separate unit for cloud focus with hyperscalers, AWS, Azure, GCP, even more. And the second unit for data products on top of our IP, Mosaic and Lenny, will focus inordinate amount of bandwidth, sales, architecture, capabilities, creating pods with the customers in a meaningful way in these two areas. So we'll take the savings that we get and fund it back into the business.
Okay. Last couple of questions. One is on again, I just go back to client wins simply because that's testimony of how people are being receptive to the kind of work that you and your team are doing, right? So as I looked at some fine print, a lot of traction in the 10 million plus size of clientele, growth across all your large clients. Would you reckon that end of Q3 and Q4, your presence in the large client vertical, whether in deal wins or in executing and getting this more revenue from the same client, would actually move up compared to, say, what it was end of FY20?
See, our growth has been typically driven by our next 50 after top 20 accounts. And that was a stated strategy 5 years back because we launched a program called Minecraft. If you just to remind you, Niraj, if we reflect back 5 years back, 23% of our revenues used to come from oil and gas. Oil and gas, if we had the same numbers, 23%, we would be talking about when will you come out of trouble. right? Because the sector as a whole has been performing very badly. We had to create resilience in the geographies that we operate in the sectors we operate in. We had to incubate new sectors. We had to focus on, our 20 to 50 accounts after top 20. That is what is resulting in a faster growth for us. We need to continue to grow on the top accounts as well, but the drive on invest accounts has been very strong for us.
Okay. And since you spoke about sectors, I just see that, for example, I mean, BFSI has worked like a charm for you, unless I'm very wrong, in the quarter gone by. It's helped the sequential marginally off performance in sectors like insurance, etc. Do you reckon that this train continues, and these sectors, do they bounce back in quarter 3, quarter 4? Again, I'm asking you because while your clientele would be spread across geographically, when I speak to Indian insurers, all of them are actually talking about really strong business momentum coming up back.
Yeah. So look, financial services, it's got two parts. Banking, we feel confident. We have shown the numbers and we feel confident in the next 2 quarters as well. The growth is going to be there. We were suspecting in Q1, I had called out, we don't know how many mortgage failures will be there, how many defaults will be there, but we have not seen any of it. So we are confident in H2 also, banking will continue to grow. Insurance has been an underperformer for us, for the industry, because the kind of toll they have taken from lower premiums, the the fires in California, the hurricanes that have been there in the world, that's been far worse than before. The premium income also has not been good for the insurance companies. But we have a robust pipeline, but we also have to get our act together in insurance sector specifically. But there are some sectors, Niraj, frankly, which are still not completely out of the woods. And for us, manufacturing, automotive, etc., if your factories are still not working and operating on the full levels, they will continue to see challenges. Oil and gas as well will continue to see challenges for some time.
Okay. Sanjay, one last question. The last interaction that we had a few days ago, you had spoken about that you see this as exponential growth. I mean, without classifying it as anything else, your terminology, if I'm not wrong, was exponential growth. This quarter is looking very solid. Your commentary is looking solid. Anything that you see could play a disturbance with the apple cart? Because I can clearly see COVID is not disrupting the apple cart. What could, if anything?
Look, we need to be cautious, because when there are rising inequalities, when there is turbulence in the marketplace, there will be performance issues with companies on and off. And if they happen to be your customers, you will see some hit coming on to you. Case in point is this quarter, we had one hit on a large high-tech account where reprioritization because of COVID-related operational efficiency drivers had an impact on us. So if it affects us, it'll affect our numbers. So anything is possible. That is definitely a case. But by and large, there is robustness and opportunities in the market that I feel more confident about.
Well, we wish that this confidence becomes even stronger in the quarters to come. Thank you, Sanjay, and keep up the good show.
Thank you, Niraj. Good talking to you.
Likewise. Stay safe. And viewers, thanks for tuning in to this conversation with the management of L&T Infotech.